Let's talk about the biggest thing that holds traders back. It's not usually the strategy, it's not the indicators, it's that gut-wrenching, paralyzing fear of taking a loss. But what if I told you there's a way to use math, simple math, to completely dismantle that fear? In this video, we're going to break down exactly how to do that, turning fear into pure confidence.
Welcome to AI Explains ICT. For this overview, we're diving into the core content from Month 2, Episode 4. And this quote right here, it just gets right to the point, doesn't it? Losing is going to happen. It's a fact. The real problem is when the fear of losing starts making your decisions for you. That's a recipe for disaster.
So, why do so many traders burn out? Honestly, it's almost never the market's fault. It's the war going on inside your own head, that battle against the fear of being wrong. And the crazy part is, that very fear is what causes you to make the worst possible moves.
Fear messes with you in some very real ways. According to ICT, it creates what he calls trade paralysis. You know that feeling, right? You see the perfect setup, everything lines up, but your finger just won't click the mouse. That's fear. It keeps you from acting. It keeps your mind stuck on what could go wrong, and it makes consistent profit, well, basically impossible.
To get past this, you need a radical shift in how you think. For a professional, a loss isn't a failure. It's not personal, it's just a business expense. Think of it like a bakery having to throw out some unsold bread at the end of the day. It's just part of the cost of doing business. It's expected.
Okay. Enough about the problem. Let's get to the solution. And it all starts with how you frame a trade before you even think about getting in. We're going to walk through a visual guide here using ICT's principles to spot a really high probability setup. First things first, we look for what's called a bullish order block. See that last down move right before the price shot up? That's not random. That's like a footprint left behind by big institutions. It tells us they were likely buying up everything in sight right there. So when price comes back to that area, well, that's a spot we pay close attention to. And we can get even more precise. Inside that order block, see that little bit of space? ICT calls this a fair value gap. For our purposes, think of this as the bullseye. It's our highest probability zone for planning an entry. It's the sweet spot.
Now look what happens when we put it all together. We can define our risk with a really tight stop loss, maybe 20 pips. See that tiny little red box? That's all we're risking. But look at the potential reward. These huge green boxes. This lopsided picture, this asymmetry, where your reward is 3, 5, or even 10 times bigger than your risk. This is the key. This is the foundation for all the math we're about to do.
All right, now for the really good part. We're about to absolutely destroy the myth that you have to be right all the time to make money in trading. The actual numbers tell a very different and much more freeing story.
To keep things super simple, let's just imagine we have a $5,000 account, and we're only taking 10 trades for the entire month. That's it. Nice and easy. Let's see what happens.
Okay, let's start with a scenario where, frankly, you're a pretty bad trader. You're wrong 70% of the time. That's 7 losses out of 10 trades. But because you're always aiming for that 3-to-1 reward and only risking 1%, your 3 wins make you $450. Your 7 losses only set you back $350. Do the math. You're still up, even being wrong most of the time. That leaves you with a $100 profit, which is a 2% return for the month. Now, I know what you might be thinking. 2%? That's it? But hang on. A 2% return per month is incredible. That's over 26% a year, compounded. Professional fund managers would kill for those kinds of returns. This is how you build real wealth, not by being a perfect predictor, but by being smart.
Now check this out. What if we don't get any better at all? Our accuracy stays at a terrible 30%, but we change just one thing. We only take trades where we can aim for a 5-to-1 reward. Suddenly, that $100 profit becomes $400. That's an 8% monthly return. We didn't get smarter, we didn't get luckier, we just aimed higher. That's the power of framing your trades.
So if you can make money while being wrong all the time, what's a realistic, optimal goal we can shoot for? Well, ICT lays out a blueprint that's not just profitable, it's designed to be completely low stress.
This quote says everything you need to know. You don't need to risk a huge chunk of your account to get rich. The best models are built on small, consistent risk, just 1%. It's all about playing the long game with math on your side, not swinging for a home run on every single trade. And here it is, the sweet spot, the optimal goal. And what is it? Just be right half the time. That's it. A coin flip, 50-50. You keep aiming for that powerful 5-to-1 reward, and you keep risking only 1% per trade. So, your 5 winning trades make you $1,250. Your 5 losing trades only cost you $250. The final result? A net profit of $1,000 on your $5,000 account. That is a 20% return in 1 month. Let that sink in. You were wrong half the time, risked almost nothing on each position, and you still pulled a return that Wall Street hedge funds can only dream about.
And this is why it's optimal. It's not just about the money. It's about creating a career you can actually sustain. The risk is tiny. The accuracy you need is laughingly low, which means your stress levels are low, you're not forcing trades, you're not glued to the screen in a panic. You can wait patiently, and actually,
Once you really, truly internalize this math, your whole relationship with losing changes. A loss stops being this big, scary monster. It just becomes a number, a calculated, expected cost in a profitable system. The fear just evaporates, because you know with mathematical certainty that you don't have to be perfect. You don't even have to be close.
So I'm just going to leave you with this one question to think about. Seriously, what would change for you, in your head, in your trading, if you knew for a fact that you could be wrong half the time and still make 20% a month? Because that's not a pipe dream. It's not a fantasy. It's just math.
Hey, if this breakdown was helpful for you, do us a favor and like this video, and make sure you're subscribed to the channel for more deep dives like this one. Got any questions? Drop them in the comments section. A real human will get back to you. Safe trading out there.